Circle's opening bell at the New York Stock Exchange this morning marks a milestone for crypto's march into mainstream finance. The USD coin issuer priced its shares at $31, $3 above an already raised range, moving 34 million shares and collecting about $1.05 billion. On that basis, the company is worth roughly $6.8 billion, or just over $8 billion fully diluted, making this one of 2025's biggest tech listings. Investor demand was ferocious. Circle's bankers at JP Morgan, Citigroup, and Goldman Sachs had first pitched 24 million shares at $24 to $26, then lifted the deal twice before books closed. Even so, orders reportedly ran more than 25 times the available float. Notable buyers include Cathie Wood's ARK Invest, which flagged interest in as much as $150 million of stock. The syndicate also has a 30-day option on another 5.1 million shares. Founded in 2013 by CEO Jeremy Allaire, Circle is best known for USDC, the world's second largest stablecoin. USDC's market cap of about $59 billion translates to roughly 27% share, well behind Tether's USDT, but far ahead of every other rival. Stablecoins processed more than $27 trillion in payments last year, surpassing Visa and MasterCard combined, and USDC's transparent reserve reporting has become a selling point for banks and payments networks that now view blockchain rails as a serious settlement option. Analysts at Citizens JMP project that stablecoins could swell to a $3 trillion asset class by 2030 as remittances, B2B transfers in tokenized markets migrate on-chain. That forecast, echoed by Citi and others, casts Circle as a pure play on what many in fintech now call crypto's killer app. Circle's timing also rides a friendlier political tide. President Trump has rolled back several Biden-era crypto curbs, appointed former SEC Commissioner Paul Atkins to lead a more permissive agency, and urged Congress to pass the bipartisan Genius Act and Stable Act before the August recess, legislation that would formalize standards for dollar-backed tokens. Industry lobbyists describe the moment as a post-regulatory land grab. Regulatory credentials are Circle's calling card. The company secured the first New York State BIT license back in 2015 and maintains money transmitter approvals in every U.S. jurisdiction that requires them. For risk-averse institutions evaluating stablecoins, that decade-long compliance record is a differentiator. Financially, Circle generated $1.68 billion in revenue and reserve income last year, converting that into $156 million of net profit. Healthy, though down from $268 million in 2023 as rising distribution fees to partners such as Coinbase trim margins. Interest earned on short-term treasuries that back USDC still accounts for the bulk of earnings. The IPO window that froze in early 2022 is showing new life. Since mid-May, eToro's stock has risen about 25%, while AI cloud provider CoreWeave has more than doubled since its late March debut. Circle now becomes the year's latest test of risk appetite. Will investors treat CRCL like a fintech utility, a high-growth crypto bet, or something in between? For now, the message is clear. In the battle to bring digital dollars into the heart of global finance, Circle just secured a war chest and a ticker symbol on the big board to match its ambitions.